one thing that I want to point out that's in the notice, 2020-65, it says that as an employer, they're recommending, if it's necessary, that you make arrangements, right, to collect the Social Security tax from your employee. They're asking you to make arrangements. They're not giving you a promissory note. They're saying it's up to you to go to your attorney, get a promissory note for this employee so they can literally repay their taxes back to the government. Well, good afternoon. My name is Susanne Mariga, and I am the Chief Accountant and Chief Profit Advisor here at Mariga CPA. And today, as part of the Profit Talk, we are going to have a very interesting and really a popular question I'm getting right now. And I'm getting this question a lot from my clients, from everyone, really. And it's related to the payroll tax deferrals. And they're asking me questions like, what is it? Should I participate in this? Am I even required to participate in it, right? Because the laws are very, very vague in terms of how they're written at this point and not a whole lot on it. And today, we really want to just dive in and tackle those issues related to the payroll tax deferral question. And just before I begin, there's just some housekeeping items. For those of you who are joining us first time, welcome. We're glad to have you here in our group. And as you join, please put your name in the chat as well as where you're from. And also feel free to participate in the conversation. I love the interaction. I love the people, the camaraderie, and I want to know your thoughts. I want to know your questions. So please feel free to put those in the chat, drop those questions in there, and I will make sure that I get to those. Now, if you're joining us on the replay because you're not able to make it with us live today, please type hashtag replay. Please type hashtag replay so that we know that you have joined us. And if you have any questions as I go along, please feel to drop those questions in the chat, and I will make sure to answer as many as I can. And if you're watching us way later on our podcast or on our YouTube channel, we're also happy to have you also. Please go ahead and hit subscribe because as you no, we do release video content as well as podcasts on a regular basis because we want to help you maximize profits in your business, right? We want to help you maximize profits in your business. So we do release content pretty regularly. And also, if you're on the podcast, definitely make sure that you subscribe, but not only subscribe, tell us your feedback. We want to know how we're doing. So in the feedback section of the podcast, please go ahead and put your feedback so that we know that so that we can help you achieve your profitability goals. Also, we're hosting another masterclass. For those of you guys who haven't participated, our next masterclass is scheduled for the week of October 26th and it'll end on October 30th. And during this masterclass, I'm going to teach you how to implement Profit First in your business. Now, for you guys who are not aware, Profit First is an amazing cash management system that you can help implement in your business to really help you prioritize and maximize your profitability. Now, during this week, we will have one lesson per day, and the lessons will last approximately 1 hour per lesson. However, in order for you to attend the Profit First Masterclass, we do require that you must enroll in the masterclass. So to enroll, what will need to happen is you'll need to contact your concierge who will provide you with a workbook and as well as the enrollment link. So if you don't know who your concierge is, go ahead and put it in the chat. Say, hey, I don't know who my concierge is, and I will make sure that your concierge reaches out to you to provide you with the link for the masterclass as well as the workbook. So don't miss it. Sign up today. We do anticipate limited spots and we do want this class to be very intimate. Yes, Rachel, our masterclass starts the week of October 26th. So thank you. So definitely reach out to your concierge so that we can get you enrolled. So let's talk about payroll tax deferrals. Now, this has been a hot topic, a super hot topic. And for many people, it's been a confusing topic. And for those of you guys who are not aware, it's also a very risky topic too. It's very risky. And what a lot of people don't realize is that there were actually 2 payroll tax deferral programs. There's actually 2 of them. And one of the things that I want to stress about the payroll tax deferral program is that it's a deferral, right? It's a deferral, meaning that it is not a holiday. It is not a tax-free holiday. It is not a forgiveness. This is a deferral. This is simply kicking the can a little bit more down the road. You still will owe this payroll tax. It doesn't go away. It's just literally just deferring it for a short period of time. And so what that means is if you're not paying it today, you're going to have to pay it tomorrow, right? So keep that in mind as we go through our class today, that this is a payroll tax deferral. It is not a holiday. It is not a forgiveness. You will still owe this money if you choose to participate in these programs. Now, the first payroll tax deferral that I want to talk about was actually part of the CARES Act. And the CARES Act, for you guys that remember, it was actually issued last spring. So like March 2020, it was issued. It was issued part of the Coronavirus Aid, Relief, and Economic Security Act program. And what this first program allows you to do is, what this first payroll tax deferral program allows you to do is, it allows you as an employer to defer the deposit of the employer's share of payroll taxes related to the Social Security taxes. Yes, Dan. So the first one allows you as an employer to defer your Social Security matching. So, and also if you're a self-employed person, meaning that you're a one-man show, that you don't have any employees, this also applies for you too, is what that means. And what it does is it allows you also to defer part of your self-employment taxes if you are self-employed. Now, notice I am saying the word Social Security taxes, Social Security taxes. So, and I'm referring just to Social Security taxes. So when you pay your employees, you withhold that 6.2% for Social Security. Well, you have to, as an employer, you do a match, right? You do a match of the Social Security taxes. And that is normally 6.2%, right? It's normally 6.2% that you match. Well, that first payroll tax deferral is referring to just that 6.2% of the employer match. And what the CARES Act allows you to do is to defer that taxation, is what it allows you to do. Now, this deferral doesn't include Medicare. It does not include Medicare. It does not include federal withholding. So if you're withholding taxes for your employees for federal, which you should be, as well as Medicare, and you're matching the Medicare, you still need to continue to do so, okay? You still need to continue to do so. And also, if you have state taxes or city taxes, these don't go away either. These still continue to exist. So make sure you continue to pay that. This is just the employer's portion of Social Security. Now, the CARES Act, what it states is that as an employer, you may defer deposits of the employer's share of Social Security during this payroll tax deferral period. And this payroll tax deferral period is from March 27, 2020 through December 31st, 2020. So for just the next few months, you're able to defer that if you choose to opt into that program, okay? And that's just the employer's portion, is what I'm talking about today. Now, as an employer, if you elect to participate in this, you still must file your payroll tax returns. If they're quarterly or annually, you still must file those. Those requirements for filing do not go away. However, what happens if you participate in this program is you're not required to deposit the employment taxes related to the employer portion of Social Security. You're not required to do that during this covered period of March 27 through December 31st. However, as I mentioned before, this is not a tax holiday. This is not a tax forgiveness. This is simply a tax deferral, right? This is simply a tax deferral. And what I mean by that is you're going to be required to pay this tax back to the IRS. And it's going to need to be repaid in two different segments. So the first segment is December 31st, 2021. That's the first major deadlines. And what that means is on December 31st, 2021, half of the money that you would normally pay, right, for Social Security as part of the matching component, that is going to be due December 31st, 2021. And then the remaining amount is going to be due December 31st, 2022. So that means you're going to have 2 years to repay this employer portion of the Social Security employer match that you would normally pay. Now, let's talk about my thoughts on this matter regarding the first payroll tax deferral. Let's talk about my thoughts on it. First of all, I'm really concerned. I'm really concerned because my thoughts are, if you are cash strapped now, and if you're in a position where you are unable to pay the Social Security match, what makes you think that 2021 is going to be much better? What makes you think that 2021 is going to be easier for you? Okay. And if you guys haven't heard already, the CDC, or the Center of Disease Control and Prevention, just announced that they are thinking that the vaccine for coronavirus is not going to be made available to the majority of the population until late 2021. Okay. So late 2021. So that means to me, if you are cash strapped now, and you're having a hard time paying your bills to the point that you have to hold back on remitting your employer portion of matching for the Social Security tax for your employees, you're probably going to have the same problems in 2021, right? You're probably going to have the same problems. And so even though the government is giving you the opportunity to defer this repayment to later, some people are thinking, well, will they change their mind? Will they just forgive it? You know what? It's honestly a crystal ball. Maybe they will, maybe they won't. But is this a risk worth taking? Is this a risk worth taking to you? Now, as a CPA, and as a profit first strategist, I would rather see you revamp your operations. Okay. I would rather see you revamp your operations. I'd rather see you change your pricing strategy, reduce your headcount. And I'm glad you're finding it helpful, Catherine. And I would rather see you make your payroll taxes on time. I'd rather see you make your payroll taxes on time instead of accumulating debt, right? Because this debt, if it's a short term ease of cash flow, you're still going to have to pay it, right? And I'd rather see you make those adjustments in your operations right now, right? Because you're going to need to make these adjustments, and you're probably going to need to keep these adjustments going in 2021 than accumulate debt. Okay. I'd rather see you take that strategy. Now let's talk about the second payroll tax deferral option that's out there. The second one that just got released, just got announced by our president on August 8, 2020. Now on August 8, 2020, the President of the United States issued pursuant to a presidential memorandum, he stated that in Section 7508A, under his authority, he used his authority under Section 7508, that's part of the Internal Revenue Code, and he used his authority to defer the withholding, deposit, and payment on the employee's share of the Social Security tax under Section 3102. So he literally pronounced that you can not withhold, not deposit, not make payment if you didn't withhold this for the employee portion of Social Security. And he did this because of the COVID-19 pandemic. And so what does this mean? What does this mean for you as an employer? Well, what it means is that if you're an employer, right, you have been impacted, if you're in the United States, by COVID-19. And as a result, you can defer the collection of Social Security tax that is normally withheld on your employee's paycheck. Notice again, I said it's only the Social Security tax. So it's not your Medicare, it's not your federal. You need to continue to withhold that. You need to continue to remit that. Continue to follow those tax returns. And this is only a referral. And again, I want to stress, this is not a tax holiday. This is not a tax forgiveness. This is literally just a deferral. And what this means is that you're going to need to pay this money back, right? You're going to need to pay this money back. And this deferral is in place from September 1st, 2020 through December 31st, 2020. But it has to be paid back within 4 months, right? 4 months. And that 4-month repayment period begins January 1st, 2021 through April 30th, 2021. Okay. And so what that means as an employer, once January 1st, 2021 comes around, you're going to need to double withhold Social Security, right? You're going to need to double withhold Social Security on that employee that foregoed withholding his Social Security tax. And literally, you're going to need to withhold this so that it can be paid back by April 30th, 2021. And in Notice 2020-65, it says that the employee must pay it back ratably from their wages and compensation. So that means that you're going to take the amount that should have been withheld, and you're going to divide it by the number of pay periods that are there from January 1st to April 30th, and literally make sure that they pay that back over 4 months. Now, one thing that I want to point out that's in the notice, 2020-65, it says that as an employer, they're recommending, if it's necessary, that you make arrangements, right, to collect the Social Security tax from your employee. They're asking you to make arrangements. They're not giving you a promissory note. They're saying it's up to you to go to your attorney, get a promissory note for this employee so they can literally repay their taxes back to the government. And so what you're seeing here is the government is literally putting the burden of collections on you as the employer. It's putting the burden of collections on you as an employer. And what this means is that as an employer, you're responsible to collect this money from your employees within the first 4 months of 2021. And my question for you as an employer is, do you want to be responsible for this collection? Do you want to be responsible for this? Now, I'm going to be honest with you. We live in a millennial world. Right? And what that means is that people that are here today may not be with you on January 1st, 2021, right? That's just how it goes. And however, in the Notice 2020-65, there is no repercussions currently written in there for employees who choose not to pay it back. Okay, there's no repercussions in there for the employee. But however, the responsibility relies, as it is written, on the employer, right? It relies on the employer to pay that back. Do you want to be responsible for this? Do you want to be responsible for this? Now, first of all, if your employees are to be eligible for them to participate in the program, they have to make less than $4,000 in a biweekly pay period. So every 2 weeks, they have to be paid less than $4,000. And if you have a different pay period, like weekly or bi-monthly, you're going to need to make sure that you adjust mathematically to make sure that it's not more than $4,000 or $104,000 in a year for them to be able to take this. But on a good news, I have some good news. The IRS did state via teleconference that employers are not required to participate in this program. So employers are not required to participate in this program. You are not required to participate in the employee withholding and allowing them to defer that. You're not, just as you're not required to participate in the first one where you can defer your payroll tax. So let's talk about my concerns. Let's talk about my concerns here right now. And I'm going to address both of the payroll tax deferral programs for you. First of all, this is a deferral. This is a deferral. And what this means is there's no forgiveness, right? This is not a tax holiday. You will owe this taxes. And you are, as an employer, if you elect to participate in either of these programs, right? If you elect to participate in either of these programs, you are legally responsible to remit the payment to the IRS. You are legally responsible to do that, right? It relies solely on you to do that. And in the latter program, there's even a bigger risk. There's a bigger risk because, if the employee is saying, you know what, defer my Social Security tax, defer that, don't pay that, first of all, I don't see a benefit for you as an employer for doing that. I don't see a benefit for you as an employer, and I don't see even a benefit for the employee, right? Because they still need to pay it. And my opinion is if you are hurting that bad for cash flow right now, you're hurting that bad for cash flow. If your employee is hurting that bad for cash flow, yes, this feels like a great temporary solution, but what happens if things don't improve on January 2021? What happens if things don't improve? Now, because you've allowed your employee to not withhold Social Security for these months, now you have to double, right? You have to double. So now the employee has to double up on their Social Security. And in some cases, jobs change, right? Jobs change, people move on. Sometimes there's emotions that happen. And if there's a change in pay, this could even be a tripling, right, of what they would normally have to pay and to pay this back over that 4-month period. And that is, for you guys, it's 6.2% of your gross wages, 6.2% of your gross wages. Imagine an employee having to pay back $6,448 if they're making $104,000 within 4 months on top of their regular payroll taxes. Imagine that, right? So if they're having a hard time with cash right now, 2021 may not be better. And imagine having to pay an additional 6.2% on top of that, okay? That's a huge burden, right? That's a huge burden. Now, my second concern about this payroll tax deferral is there are no clear limits on the potential liability of the employer. There are no clear limits. In fact, the way that Notice 2020-65 is written is the employer at the end of the day is responsible for collecting the back Social Security taxes. The employer has that responsibility. In fact, the notice says that the employer, if necessary, should make payment arrangements to collect the tax. It says the employer should make payment arrangements. Now, like I mentioned earlier, we're in a millennial world. Imagine having to chase an employee who is no longer with you to collect the back Social Security tax so that you can remit it to the IRS. I think that's going to be pretty hard. I think most employees are going to tell you, talk to the hand on that one. And then what if you can't collect from the employee because they're no longer with you? What happens if you can't collect from the employee? You as an employer are responsible for remitting the payroll taxes, whether you collect or not from the employee, right? You are responsible as the employer to remit it. And have you guys ever heard of something called the trust fund penalty? Have you ever heard of that? This may totally apply here. So my question is this payroll tax deferral really worth taking? Is this really worth taking? Does the short-term benefit to you as an employer, even employee, is it really worth it? And in my opinion, you're just increasing your debt and you're just taking on unnecessary risk. And I recommend that you just find another way, I hope that this was extremely helpful for you today. It's been a pleasure spending time with you once again. And until next time, may the profits be with you.